the bank.
Hey guys, welcome back to another episode of Money in the Bank. This week, as always, I have with me Brett.
Hey guys.
How are you doing today, Brett?
Oh, doing great. We're making some big moves in our property management ventures, so very excited.
Yeah, it is. It is really exciting. We'll have to do another episode about that at some point in the future and maybe talk through some of the cool stuff we've had going on. But today, kind of related to that, we're talking about insurance, which is one of my favorite topics.
Yeah, so recently we just did some changes to our insurance portfolio and who our vendors are and how we're approaching that whole scheme in our personal and business lives. So we want to share with you guys some of the tips and tricks that probably most people that I'm aware of do not do this, and it's a great money saver for sort of big dollars.
Yeah, so I guess just to we'll talk about our scenario first, I think, and then we'll kind of walk through talking points on each of them. So we have, a house, 2 cars, and 3 doors, technically, for rental properties. So 2 structures, but, 3 different doors.
3 addresses.
Yeah, 3 addresses. So we have quite, the portfolio. We had, obviously, homeowners insurance on our house, our duplex, and our condo. And then we also insure both of our home vehicles, or both of our vehicles. So... we had all this stuff, and the way we had it, we went through somebody who checked multiple different lines for us a few years ago, and we got, cheaper rates at that point. But it had been, maybe 3 or 4 years since we had kind of run the numbers. And so just by going to, another third-party guy who could run numbers from a couple different companies, we just saved a boatload of money. I feel like a Geico commercial. Like, call Geico and you can save 10% or more, right? Like,
not a sponsor.
Not a sponsor, no. And we're not. I won't even disclose the company that we used or anything like that. This is not sponsored. This is just like literally a true story of we just saved ourselves like well over $1,000 a year, and we wanted to pass this on.
Right, just from checking, right? Just from talking to somebody about it. We didn't have to do anything complicated. It wasn't, we just filled out some extra forms and it took 30 minutes to like get everything squared away as far as the paperwork. And yeah, we are actually saving over $1,000 a year just from checking.
Yeah, and so the way we met the guy that we ended up checking with, we went to like kind of a networking event, I guess. It was a real estate networking event in town here, and we met with our mortgage broker actually invited us, and then there were a bunch of different people there, ranging from like realtors to insurance people to different bankers and all just the people that you kind of need in your back pocket when you're doing real estate transactions. And this guy, it was really cool because we were talking to him, and like he wasn't even trying to sell us anything. Like, we're just like eating chips and salsa and talking about like football
and Wisconsin.
And Wisconsin. I was talking about brats. And from there, like, it just very organically, we were like, oh, so what do you do? And he was like, oh, well, I fly planes, but in my spare time, I sell insurance just because I think it's fun. And I was like, oh my God, my kindred spirit. Like, and he was very not pushy, but he was like, if you want, I can just give you a free quote and like check over all your stuff for you and make sure you have, the right coverage. So actually in doing this, we have more liability coverage than we used to, and we still pay a cheaper price.
Yeah, absolutely. I think everything was a little bit better. Even the individual coverages on like the homeowners insurance and that thing, plus the big umbrella that we have. Yeah, it's all better in like every category, and it was significantly cheaper, over $1,000 cheaper. Like
so that's kind of my first lesson is when you are, I do encourage you, especially after our experience, to, if you haven't checked your insurance rates in a while, call an independent, broker in your area that can check multiple different insurance companies and see. But the big caveat is make sure you are at least getting equivalent or better coverage, unless you were, over-insured or something. But, you want to make sure you're comparing apples to apples. And I know, Brett, when I met you, you had just kind of like stayed on your parents' auto insurance policy, and like you were just paying that, and I was like, hey, like let's review this, and that was the first time we reviewed it, and there were certain things on there that I was like, do you know that you're paying extra to have this? And you were like, oh no, I don't need that. So, one thing that comes to me off the top of my head is if you get into a car accident, you can have it on your policy where they will pay for you to rent a car while yours is, being repaired or whatever it may be. But you can, there's sometimes that you can get $100 car rental, or you can get like $30 car rental. And these coverages, vary in price. Another thing, Brett, I know when you first started driving, you drove your grandma's car. And on that, for example, you might not need collision, because if you get in an accident with that car, then it's not worth enough to buy a new one, right? So instead of having full, coverage on your car, sometimes it's better to, take the collision off once your car is a certain age. So, Brett, again, going back to your first car, it was your grandma's old car. So, likely on that one, it didn't really make sense to keep the full package on it anymore.
That was the cheapest insurance that I could find. That's what I got on that, right? But I feel like my parents have been with their insurance company, and it's probably true of a lot of the baby boomer generation. They probably have picked an insurance company that they've been with for 40 years or more, and because if they treat you well, right, then you're going to stick around with that person. If they don't treat you well, and like you're not getting good coverage, or you're not even sure what kind of coverage you have, but they say it's good, there's no reason for you to change or check around. But if you do check around, and that's the first step, is just like look around at other individual insurance companies, right? Like the big name ones you always see the advertisements for on TV. Just check around those. And the next thing, I think the next level up even from that is what we're talking about, is having a brokerage firm or insurance brokers, and you can Google search, right, to find the ones in your area. Just have them search the vendors that they have available to them and the inside deals that they have, and you're not going to pay anything extra to do that, right? And you may get the better deal overall, like what happened with us.
Oh yeah, and I mean you can do this all the time, and you can check with multiple brokers, and it's no risk to you. You don't have to sign up for anything, like for us, and something I wanted to add about, people just kind of picking an insurance company and sticking with them and using whatever your parents had. The way insurance companies are designed is there's certain ones that they, you get a lot better price if you're older versus being in your 20s, like people in their 60s pay less than in their 20s. But then there's, another company out there that is the exact opposite, right? And it all kind of depends on what do their books look like and how have they developed their rates, And it honestly, all of these big names, like you're getting good coverage no matter where you go. It's all the same. Pay the cheapest amount,
Right, because you're gonna get. It's not like they're trying to wheel and deal you on like the different features, and like some are less. It really depends on your age and potentially the car that you drive. Yeah. Right, for the different insurance age. It's like I know Progressive for like college age students or just out of college students have way better prices than if you were to go with like something for like State Farm, I think. Yeah. Because that's what I had when I graduated with State Farm, and like Progressive like blew them out of the water for my age range. But State Farm is a better one for my parents, right? So.
Yep. Yeah, that's exactly the example I was thinking of. State Farm for younger people is just really expensive right now, whether, they're just not geared up to insure younger people, or maybe, they have their fill of younger people and, they don't want any more, but their rates for younger people are really, really high, where Progressive and Geico are a lot lower. So,
right. So you don't have to understand the back end of the complexities of how the insurance companies operate, but just know they are all not the same and will not give you the same pricing or even in some cases similar pricing on the same coverage.
Yeah.
For you personally.
And we ran into that with our homeowners insurance. That's what actually prompted us to kind of do this check in the first place, because every year, I'm a nerd. I'm going to look at the details of our policy, and we don't have to get into it on this podcast because I know a lot of people probably don't care about Schedule A versus B versus D, whatever. That's just me. But, so I look at this every year, and I try to like back out the pricing and see what's increasing. And I just kept, kind of like telling Brett, like, our insurance is going up again and again and again, and it's not making sense. And all of a sudden, from when we signed up with this company, it was almost double in like 4 years. And I was like,
I think it was 3 almost.
Yeah. And I was like, something is wrong here. And again, it's just that company, their policies for younger people have just gotten more expensive for whatever reason. And, another big thing, by consolidating everything together, we could finally get everything under one company. So originally, when we had this done a few years ago, our Progressive was like blew everybody out of the water so far on auto insurance that, and they don't do homeowners insurance in our state at least, that we couldn't get a better combo deal. But now with the amount of properties we have, we could get a better combo deal, which was really nice. So I think, that's most of what I wanted to cover there. Is just, if you haven't checked in a long time or haven't ever thought about checking, just do it. And, I know you might feel like you have this loyalty to this company, but honestly, you still need to get the best price for you, So, while you might have this loyalty, how worth it is that to you, I guess? Is it worth $1,000 a year?
Right.
All right. So moving on, I just wanted to kind of now talk about each different insurance real quick and just bring up a couple different points that people might not be thinking about with these things. So with auto coverage, you have a deductible and you have a premium, right? And the premium is what you pay either monthly or every 6 months or every year. And then the deductible is the amount that you pay if you get into a car accident.
It's your share of what is paid for that accident.
Correct. Yeah. So if you get into a car accident, even if it's not your fault, if you have a $100 deductible, you have to pay $100, right? And if it's $500, etc. And a lot of people try to set the deductible as low as possible, but I always say, if you have a well-stocked emergency fund, if your deductible is $100 right now, you will save so much money by cranking it to $500, right? So it's like, if you have $500 in the bank and you're okay with having that amount of a loss, then that's something you can consider, especially, if it starts saving you $20 a month, for example. Now, I don't know what actual savings are, but this is just hypothetical. You make up that difference in 2 years. So if you don't get in an accident in 2 years, you could pay for your deductible.
Right.
So that's just something you can kind of play around with.
Because the trend is the higher your deductible is, the lower your principal payment is, right?
Correct. Yep. Your premium payment.
Yep. So the monthly payment or the annual payment or 6 months or whatever you're paying,
yep,
that will greatly go up or down based on whether your deductible is high or not.
Yep. Exactly. So that's just one thing I always want to mention, because a lot of people don't always quite understand how that works. And so then the next thing is, we've talked a lot about feel free to drive older cars and, buy used cars if you're buying a new one. And there's some point where it doesn't make sense to keep collision on a vehicle. So you actually had a great example of this when you mentioned driving your grandma's old Buick or whatever, right? You likely didn't have collision on that car because you were like, if I get into an accident, I'm not getting anything for this car anyways.
Right, and by collision we mean if you get into an accident or if something happens to your car and it gets totaled, how much are they willing to reimburse you for that car, right? Versus if you get insurance that doesn't have collision, it'll just cover if you hit somebody else. It'll cover the damages to their car.
And the liability, right? So
yeah.
if they get any injuries, yep, then it covers their hospital bills.
Yeah, so the difference here, we're talking about, are they going to replace your car or are they not going to replace your car? And obviously it's going to cost you a lot less per month if they're not going to have to replace your vehicle if you get into an accident and total it.
Yeah. And my point here being, if the replacement value of your car is $1,000, but you're paying, $50 a month for this collision insurance, well, it might not be worth it, So as always, crunch the numbers, decide what you're comfortable with. But, I just think that's another area where some people keep this on their car and then they get into an accident and they're like, okay, I just got a check for $1,000. That's not really worth it. My deductible was $500, So.
Yeah, and there was a story, so I couldn't even believe this happened, but I was told the other day by somebody that their methodology for this was they thought that the math as soon as they paid off their car, as soon as they paid off the loan on their car, then therefore they didn't need to continue paying for coverage for collision. So
yeah, so that's not exactly how I would do the math. I think what they were thinking is if you have a car loan payment, the bank requires you to keep collision on your vehicle because they're like, if you get in an accident, we need to get our money back, right?
Right.
You still owe us money. But if you know, if your car is still worth, if you bought a new car and you pay it off in 3 years and it's still worth $15,000, for example, you should keep collision on your vehicle because if you get into an accident, most people listening to this podcast probably don't just have $15,000 to go buy another equal car, you know? So you want to keep collision on until you're comfortable knowing, like, if I get in an accident tomorrow, I can replace my vehicle with the cash I have.
Right. But I mean, yeah, in that example, their car was only, you know, like, let's say 6 years old at the most. And so it had a lot of life left in it, right? Let's say they last like 14 years on average for, you know, something that might be a jalopy. But they got into an accident. So this is the situation of how we found out about it. They got into an accident on the highway, 70 miles an hour, hit a deer, totaled the car, and they had just like recently taken the collision off of it because they didn't have to pay on the loan anymore, like 3 months before that.
Yeah.
I'm like, so it was totally not the right move. There was so much value in that car. It was totaled, and now that value just went out the window.
Exactly.
So, yeah.
Yeah. Well, and, you know, there are some people who they have a really well-funded emergency fund, and they might not even care how much value is in the car because they're basically self-insuring. You know, they're saying, like, I'm going to take this lower premium payment and bank the difference, and I will just take that responsibility and buy a car if I need it. But, you know, in the scenario where your car still has a lot of value and you don't have the money to replace it, just keep collision on it. But we have beat that horse enough. So let's move on. So homeowners insurance, you know, similar thing. The higher the deductible, the lower your premium. But this is where it kind of goes more extreme because with auto insurance, you can only go so high with the deductible before it doesn't even make sense anymore, right? So, like with car insurance, for example, on Brett's car, which is a 2007 Civic, we would never get like a super high deductible on it because then it wouldn't be worth insuring anymore, right? Like if we had a $5,000 deductible on your car, that would be so dumb because we could basically just rebuy your car for $5,000. So we're not paying for anything anymore. But obviously houses are worth a lot more. So you're allowed to have a $5,000 deductible or even a $10,000 deductible, right? But again, this is where don't get a higher deductible than you feel comfortable with. So whatever your deductible is, you want to make sure you have that in the bank at all times. So for a lot of people, that's $1,000 for homeowners insurance.
Mm-hmm.
And you can go down to 500. I think you can even go down to like 100 if you want to. But I caution that with homeowners insurance only because you really don't want to file a claim unless you absolutely have to. So my example here is when we were living in our old house, we had, you know, a really bad windstorm come through and strip a bunch of siding off of our house. And we got a quote that it would be $300 to fix it. And I think at the time, our deductible was really low, actually. I think it was like a $100 deductible. But I was like, for $300, I would just rather fix this myself and not have our premiums go up next year for having a claim.
Right, because they will. Right, if you submit a claim to the agency to give you, you know, the reimbursement for the insurance, they will jack up your premiums. There's people out there that believe that is not the case. It definitely will happen.
Yeah. Oh, yeah. I mean, because when they're pricing these products, they definitely look at your history.
Right. So if you then have a claim in your history that is, I think it's either 5 or 7 years they look back to see your recent claims. And yeah, if you create a claim in there, yeah, it's going to jack up your numbers and make you a higher risk potential client than somebody that has 0 on the balance. So then you're going to be paying more month over month from then on. Exactly.
So, you know, I always say, like, set it at the amount where you know, like if something small happens like that, you know, set it a little bit higher than that. So I think after that incident, you know, we reviewed it and we were like, let's at least bump it to 500, right? Because that felt more comfortable. Like, yeah, you know, maybe if a tree fell and we had $2,500 of damage, then we would file a claim anyways. Because, yeah, our insurance is going to go up, but it's worth it for that, you know? So just, again, look into that, figure out what your own comfort level is. But do keep in mind that if you file a claim, your insurance will likely go up. So kind of lumped in, or in addition to, if you don't own a home, I still recommend getting renter's insurance. What this does is it ensures the contents will be replaced, in the event of a catastrophe. So, if there's a fire, the landlord is obviously responsible for rebuilding the structure, but he is not responsible for replacing your TV or your couch,
Right, and if they don't have that in the lease that you sign, then it's their fault, but it is still your responsibility to be covering that stuff.
Yep. And then lastly, the last thing I wanted to touch on is liability insurance. Now, this is something that you kind of naturally have baked into policies. So you'll have this on your car insurance, right? You have a certain level of liability where if you get in an accident, they cover so much money. And then even with homeowners insurance, you usually have a certain level where, if somebody slips and falls walking up to your front door, I feel like that's the classic example, you have, so much money that will go to paying their medical bills. But you can actually, so you want to make sure you have the appropriate amount of liability insurance on all of your stuff. You can even get this for renter's insurance. But you do want to make sure you have some liability coverage. It's very cheap. Liability insurance is some of the cheapest insurance. But when you need it, it is great to have it, right? Because you don't want to, you don't want some old lady to slip and fall in the winter on your sidewalk and sue you for $1 million, and then you just lose everything, right?
Right.
And so on top of liability insurance on all these separate policies, you can get what's called an umbrella. And basically what that is, if you get into a car accident and you get sued for $1 million, but you only had $250,000 of liability insurance, then the umbrella will kick in and pay the difference up to whatever your, defined maximum is.
Yep. So it's just an extra safety net to cover the bases. And for us, it applies across, I think, everything that we have now, right? So home and businesses, and, it's just an extra layer of protection for us. But even from a legal standpoint, it's we have our businesses separated from our family life and for tax purposes and legal reasons. But the umbrella is still, even though it's attached to our physical house, right? That still covers everything for all of our properties, our business properties, and everything. So it's all still perfectly protected.
Yep. Yeah. So we are definitely you can tell we're cautious people because we have liability insurance on every single policy. Plus we have this umbrella. Plus we created an LLC. So we are untouchable. I shouldn't say that. Then something terrible would happen. Right. But we have created as many barriers as possible to protect our assets.
Yeah. Each asset is siloed and then is inside of another silo, and then we have an umbrella over the silo that is protecting.
We just don't want any rain on our silos,
yep.
Right? All right. Well, do you have anything else to add there?
I think the one point that I want to mention is maybe going into a conversation about insurance, you'd think oh yeah, insurance companies are trying to rip you off and they're selling you more than they need to. And that was one thing that we mentioned very early on, was I was paying for something additional on my car insurance that I didn't need to have for the rental car stuff, right? So just check over that stuff, and if it doesn't make sense to you, please go over it with the agent. That's what they're there for, whoever is managing your stuff. The new person that we were working with for this venture was extremely good about talking through every single line item and why it was there, and what this particular company that they were working with that gave us the best pricing, why they were doing things a certain way. And it was just this is how they do things versus other companies do things other ways, right? We're not telling you to treat the insurance line items as they're out to get you, right? And they're just trying to overcharge you for these items that you're not going to need. That's not where we're saying you can save money here. We're saying you can save money by getting great coverage in all areas and still being very conservative, like we operate, and still making a killing and saving money just by changing the vendors that you're using.
Absolutely. And I'm glad you brought that up because, I think on top of that, I brought that up because I want people to review the line items they have, but on both ends. If there's things that you have that you're do I need this? Yes, question it. But then if there's things that you're wait, don't I need this? Don't I still need collision insurance? Question that too, because ultimately you want to make sure you know what you have. I think I've mentioned it before, but I think a lot of times insurance companies get a really bad rap about this sort of thing. But I don't actually think that, full disclaimer, I'm an actuary. So I don't think insurance companies are evil or out to get you. I think a lot of times it is miscommunication, and people don't know exactly what they have or what they, signed up for, and then they get upset when something happens, and they file a claim and they're like, wait, I don't have the $100 a day for my rental car, that I thought I would have. So review your coverage, know exactly what you have, exactly what you don't have, and then you're just more prepared to handle everything, I guess. Because, quite honestly, insurance companies, they price this based off of what you want, what your risks are, and they're not out to get you. They're out to give you a product to help protect you. But it does take communication on both ends. And while we've worked with some great agents, I know that there's a lot of not great agents out there that don't explain everything. So if you feel like you're not getting the answers you need, then please find another agent, because you have that choice, right? You're not committed to staying with anybody.
Right, and you can ask around and discover more information, and you're not committed to anything, right? You don't have to sign up with anybody. You don't have to do anything until all the paperwork's signed, and until you find a great deal that is definitely saving you money, and that it's the same coverage or better coverage, right? Don't sign anything. Do not give anybody else your money, but does not hurt to ask around here, right? Have them explain things. Have them explain how your current coverage is versus how their coverage is. Have them go through it line by line and say, why is this here and why is this on yours but it's not on theirs? That's what they're there for. And for me, looking at those forms, a lot of the times they don't necessarily make sense line item for line item. Some of them are pretty cryptic, or some of them may mean certain things to that vendor or that insurance agency. That's how they write this thing, but it means this, right? So you just have to ask some of those questions and just understand it a little bit better. And you're not going to do it just from cold turkey. You might, Angela.
Yes.
You're going to understand it a little bit better. But for me, not being familiar with these forms or what they look like in general, it's just like a bunch of line items, and they don't really translate into exactly like, if I hit a deer, then I am covered, right? Like, where's that line item? It doesn't say that. It says like act of God clause or whatever.
Yeah, and it is, I can understand that for a lot of people it is very confusing, but knowledge is power, as corny as that sounds. So the more that you can just talk to people, and let me tell you something about insurance people. Anybody that I know that works in the insurance field, which my grandpa did, all of my uncles do, my dad does, and I do. So I know a lot. We love to talk about this thing. Like, if somebody comes up to me and they're like, hey, could you help explain like the line items on my auto insurance, even though that's totally like not the line of insurance I'm actually in professionally, I would be so happy to do that, right? Like I love this stuff. While we were working through all of this, like, you would ask me questions and I'd be like, yeah, it's this and that, and no problem, right? So, and that's just that. I'm not even an agent, right? I don't even sell anything. So agents are even more helpful than I am. So don't feel like you're bothering anybody. This is what they do, and this is their profession. And most people in insurance, it's truly a passion for them. So they definitely don't mind answering any questions that you might have. But all right. Well, do you have anything else to add, Brett?
No, that was my 2 cents.
All right, great. Well, if there's any other questions you have about insurance, feel free to, drop us an email or ask questions or visit our website and leave a comment. So I will drop all of that information in below. Thanks. Hey guys, thanks for tuning in to this week's episode of Money in the Bank. Make sure to subscribe to us on the iTunes or Stitcher app so that you get weekly alerts every time we post a podcast. Or if you want, you can visit my website, moneyinthebankpodcast.com. And if you want to reach out with any questions or further comments, please email me at Angie@moneyinthebankpodcast.com. I look forward to hearing from you.
Money in the bank, in the bank.